All right, hello everybody. Doc Severson here with you, Trade School here at ReadySetCrypto. So, welcome aboard. Today is Thursday, the 4th of October. We are into the last quarter of the year. Not going to be giving any trade recommendations today. Today's topic is going to be on trade entry. So, I did get a question in Discord the other day. Topic for consideration. How do you let the trade come to you by way of selecting different order types? So we're going to be talking about buy or sell limit orders, market orders, stop orders in respect to the price action that we're talking about within the Fractal program. So to some degree, this is going to be covered in the Fractal Energy program probably early next week by the time I get this released. And I'm hoping that everything in the program is going to be 100% completed by, I'd say, mid next week. I'm going to have to because I'm going on the road at the end of next week out to Colorado Springs for the weekend. So I'd like to get this thing up and rolling. And also we do have our first coaching session on Tuesday. So hope to see you guys there if you're part of that program. Okay, so without further ado, let's make sure everything is working. Good evening to those of you that are on the other side of the planet, or good morning, as the case may be. All right, let's go out to the chart. So there's a couple of different ways that we can do this. First of all, let's speak from the chart perspective, right? So let's start with just price and volume, and let's get rid of these things. And we can look at things a lot of different ways. So if you looked at something like Bitcoin, you can see that range expansion leads to range contraction, right? Uptrends lead to downtrends. Uptrends lead to downtrends. Uptrends lead to downtrends. Range expansion leads to contraction, those kind of things. So we're seeing some of the same things in the chart. So part of the equation, about half of it here, is going to be for you to determine, okay, at what point would I enter a position? At what point would I enter a position? And this is probably not the best chart to look at because this is in just a big, wide, sloppy consolidation pattern. But like I always talk about, right, we can frame in the price action here. We can frame this in. We can add, something like, we can take it from the former highs down to the prior swing lows, and we can say, look, if this breaks above this trend line, and if it breaks above here, probably we want to take ourselves into the position. If it breaks above this level here, we want to take ourselves long if it does something like that, if the price is breaking above there. Now, you might say to yourself, well, what if it's a fake out? Okay, well, what if it is? You don't know that in advance. You don't know that in advance. So there's a couple of different ways that we could deal with that. Right, so nothing that we talk about here is going to be related to predicting the future. We don't know what's going to happen. All you can do for trade setups is put yourself in the best possible position. Okay, so I'm just going to do some freehand here with a couple of trade setups. So actually, let's do this. Let's go out to GVT. So let's go out to this dude here. So somebody brought this up in the room earlier, and the reason why this did not show up in my scan up to this point is because today is the very first day that it showed above the 200-day moving average, which is one of the filters on my scan. So if you find that too constrictive, what you can do is you can change that to a 100-day moving average if you want, or maybe even a 50-day moving average. You'll get a lot more results, a lot more noise. But this is almost exactly the type of setup that we're looking for. This is almost exactly the type of setup that we're looking for. We're seeing something that was in a former downtrend. And all right, we can, let's go ahead and add this trend line on here. So we're going to connect all of the significant lower highs, lower highs, lower highs, lower highs, all of a sudden, higher high. Consolidation, higher high, consolidation. This is exactly what we're going to be looking for down the road when the market does heal and finally starts to break higher. So first of all, you've got you've got this former downtrend, which is just leaking lower, and all of a sudden what it starts to do is it's a shift in character. It's a shift in character, which is all of a sudden it goes into what's called quiet and trending market behavior. Quiet and trending. And what it does is it breaks out and it consolidates. And it breaks out and more than likely it consolidates. This is called stair-stepping behavior. It's very common to see. The other thing that I like to see from this chart is, remember, one of the things that I always tell you guys is buy stuff that's heading higher. Play within the anchor chart swing. The anchor chart swing is now heading higher. This is a weekly chart. This thing's not been around for all that long so far. Genesis Vision, it's not been around for all that long. And a weekly swing is now heading higher, which is good. So play within the anchor chart swing. Wait for that to go higher. So now we have stair-stepping motion. So that begs the question, where do you get into this thing? Now, your emotions will tell you to jump on board as this thing is leaving the station. So this is what everybody will want to do, is chase after this thing as it's leaving the station. Now, this is different from Digitex. Now, Digitex to me is not a chartable solution right now. It's not a chartable asset right now. And it's so cheap that you have to just decide for yourself fundamentally as to whether or not you want to get into it. Otherwise, you're left with some really poor tools that are on the CoinMarketCap or whatever broker site that you can get to, which are usually not all that good. And we're not able to use, TradingView for it because it's not part of a bigger exchange. But that's kind of the news today, is that it is going to be part of a bigger exchange. Don't know which one. That's why the price is popping up the last couple of days, is based on rumors for that. So there you go. All right, so back to Genesis Vision. So what do we do with something like this? How do we get on board? So again, your brain is going to tell you, my God, you've got to get on board this thing right now. It's the last rally you'll ever see in your lifetime. And so this fear of missing out, and it's true. Actually, psychologists have found that the fear of missing out is actually much stronger. It's a much more visceral reaction than if you had been stopped out on an actual trade. So in other words, if you'd been stopped out here, if you tried to get long and you got stopped out on this position, you'd be like, oh, well, I tried, I got stopped out, whatever. And you get over it, right? But if you see a market running away without you to the upside, as many people had to deal with this back in November, December, even early parts of January last year, they couldn't stand it. It just drove them nuts, right? Everybody went through that. And that's why you ended up buying at the highs, because you're like, at the very beginning, you're like, well, I'm going to wait for a pullback. I'm going to wait for a pullback. Wait a minute. It's not pulling back. Oh my God, it's going up to 20,000. I better get on board before it goes up to 40,000, right? So this is what we all do. This is what we want to do. And you have to find a way to build a framework to give yourself a different type of decision criteria than what feels good here. Because usually what feels good here is the worst possible trade entry that you can make. If it feels good to enter the position, you're probably doing the wrong thing. The best trades that you will make are the ones that feel terrible to make. The ones that feel like, well, here goes nothing. This is really stupid for me to do this. And then usually that ends up being the correct decision. If it feels bad, it's probably the right thing to do. So right now, what feels good is to chase after this thing. But you can tell just looking at this is, all right. So if we look at things like, let's kind of blow this thing up so we can see it a little bit better, right? So let's make it more bigger. Make everything more bigger. All right, so the chop index, range contraction. Look at this amount of energy that this dude had. And all of a sudden, boom, range expansion. Look at that linear move. It is into exhaustion now. This is absolutely the wrong time to enter this position. So to the point that came up earlier, how do you let the trade come back to you? Well, what you first have to do is not allow yourself how to chase after it, right? How do you not avoid yourself to chase after it? Well, there's two ways that we can do this. If you're going to run into stair-stepping behavior, you're either going to enter in the pattern as you get the signal that you're looking for. So if you are looking at this and it's making higher highs and higher lows, and we don't have weekly exhaustion. Let's check to see whether or not that's happening. Do we have weekly exhaustion? Not quite yet, but almost there. Not quite yet. So we did have weekly exhaustion to the downside, and then as it came up, this is what restored the energy, but now it's reflecting this strong uptrend here. So it's almost at weekly exhaustion. So we could probably get one more swing out of this, maybe, but it's also going to have to go sideways for a period of time to work off this daily exhaustion. So you got time. You don't have to get into this one just yet. So two ways to get into this. So you could do this based on one of two ways. First of all, you can wait until you have the energy, and that's going to be above 55 and higher. So the higher the signal, the better off you're going to be. You can see that some of these, let's go to a different color here. Some of these actually didn't wait until it got 61.8 before it broke out. This one did. This one did. This one, we don't know yet. We don't know yet. So you can wait until it gets above 55, 60 or so, and then just enter while it's in the pattern. Enter while it's in the pattern. And that's maybe the simplest way to do this. So what you're doing is you're getting on board inside the pattern. Now, why is that an advantage? An advantage might be is that, first of all, you might be able to get a slightly lower price. Okay, so I'm going to put down here 1, and I'm going to write in, let's go with a pen here, in pattern. And then number 2 is going to be breakout. In pattern or breakout. Those are going to be the two entries that you're going to look for. So the in pattern is best if you strongly believe that this is in a nice stair-stepping pattern, number 1. And number 2, maybe you've got a job. Maybe you're doing something else in life. Maybe you're not sitting there like me staring at screens all day long. You've actually got a life. And so what you want to do is just go ahead and enter into the pattern. Once you check off that entry, that energy level that you're looking for, you just say, okay, it's going to move soon. I don't know when it's going to move. It could move tomorrow. It could move a week from now. It might wait 2 weeks before it moves. But I'm in. I'm in, and as it breaks out, I don't have to wake up at 3 o'clock in the morning and take that entry. Now, the other way that you can enter is to look for a breakout level. So as this builds up the energy, you could almost see that this level here is important. The price keeps getting rejected at that level. So what you want to do in that case, and I can't do this now because I've got the pen up, is do a right click and you can set an alert for this. You can set an alert and wait to be notified either through text message or email that, hey, this dude's breaking out, and in you go. Now, what's the pros and cons of taking the breakout type of entry? The pro with that is it's a little bit more conservative, because if the price fails like this and goes down instead, then thou art not a bag holder, right? So you don't have to sit there and hold on to your bags and enter that position and watch it go underwater, okay? Which is, it happens. It's not fun, but it's part of trading. Okay, so you avoid that. Maybe. What you can also see, though, is with the breakout level, you can see the price coming above here, and you can see false breakouts. And they do happen all the time. So there's no real huge advantage to it. Sometimes you can avoid a bad entry if the price fails in the pattern and works to the downside, which is a larger time frame pullback. And the way that you normally would find these is that when the weekly chart or your anchor chart is exhausted, this is when you're more than likely to see these types of movements where it fakes everybody out and pulls back a little deeper because larger time frame is exhausted. So the breakout is, it makes a lot of sense. You're holding your powder until the price proves to you that it wants to break out. Now you can wait for a close above there. You can add all the confirmation in the world that you want to onto this, but don't forget that the more confirmation that you add, the longer you delay your entry, the more edge you're giving up because there's only so far it's going to swing. There's only so far it's going to go. And I'm assuming everybody in here just wants to talk about swing trades. We're getting in, getting a fair share, getting out. You can also use this to enter a longer term hold position if you want to. You can certainly add as much edge as you want to. We're kind of doing that in our portfolio. We're in a few cases, like with Monero, we actually look for a higher low to set up before we then entered that one. But again, investments that are long-term holds is not that critical for you to get that much edge on here. So these are mostly swing entries. Okay, so you can enter in the pattern. The pros there is that you're typically getting a little bit better price entry and you can sleep at night. You don't have to sit there with the phone next to your bed waiting to be alerted, wake up at 3 in the morning to add a breakout entry. Or you check on it the next morning and you've lost 5% of edge on the breakout, because a lot of times the breakouts will be very violent and a lot of that edge is in the first day or so with that. Okay, so that is, now are we always going to see this type of stair-stepping behavior? No, not all the time. A lot of times you'll also see things where the price will go up like this and then it'll pull back. And then it'll go up like this and then it'll pull back. So this is my preference, is to identify this type of stair stepping, but it doesn't always happen. So with the type of pullback, what you can do is you can wait for the price to break higher out of here. Usually that's a big energy peak down here as well too. And what's happening is this is a larger time frame pullback that's occurring. So normally what's happening here is this is a pullback on the anchor chart, like your weekly chart pullback. And so you're getting a much deeper entry. You're getting way too many shorts built up at the very end of this, and they all get squeezed out. So this can be a very violent entry. And you can do the same thing here. You can wait for the price to break. You can wait for a little bit more confirmation. Depends on what type of trader that you are for this. Now, the second half of this, so the first half of this is to identify the type of entry, either in pattern or breakout. For this, the second thing that you can do is you can use your broker to help you enter that. So for like a breakout entry, you can actually take what's called a buy stop. Now, different brokers call it different things. You're going to have to check with each one of your brokers that you utilize to see what it is that they call it. So let me clean up this screen for a second here. We'll do a little bit of drawing, and then I'll move over to a live broker and show you some examples of that. So we're only going to talk about long. So it's only talk about longs. Let's not confuse things by talking about shorts. So if we want to go long, okay, we want to buy and sell later, right? Everybody gets that. It's not sell first and then buy later at a lower price. So a lot of people get confused when we talk about shorting something or going short on something. So going long means buy low, sell high. You guys get that. So how do you buy? A couple of different ways to do this. In fact, there's 3. So I want you to use this to think about this. There's 3 ways that you can get in. Now, number 1 is just using a market order. So if you're new to this, if you're new to crypto and you're trading an asset which is fairly liquid and the spreads are tight, which means you're not going to know what that means. That's the bid-ask spread. If it's relatively tight, then using a market order is not going to be the worst thing. Nobody's going to knock at your door. The bid-ask spread police are not going to knock at your door and say, excuse me, ma'am, we understand that there was a market order issued from this house. We're here to investigate. So you'll hear professional traders say that using a market order is the absolute worst thing you can possibly do. And that's down the road. That does usually cost you a little bit of edge. But if you're trading something which is one of the top 10 coins, if you're trading something that's not liquid, using a market order is not the worst thing in the world. In fact, a stop loss is a market order by itself. So that's one way to get into this. Market order is number 1. If you're new, if you're confused by this, then using a market order is not horrible. where you eventually want to get into is using a limit. So using a limit, a buy limit, which means that if here's the current price, it's below the current price. You're saying this is the most that I want to enter for this. Now, if you put a limit order up here above the price, you're going to get filled immediately, which is a mistake that some people make. So a limit is meant to be placed below the current price if you're going long. A limit goes below the current price if you're going long. What you're doing is you're looking for a little bit of a discount. You're either trying to work the bid-ask spread a little bit, or you're saying, well, you know what? I've noticed that Genesis Vision tends to bounce here between 00150 and then down here to about 13. So it bounces between 15 to 13. So what I'm going to do is I'm going to put a limit order in there, down at 13. And so the next time the price comes down to here, it's going to fill me. Now, what's the risk here is that the price may not make it down there and all of a sudden it takes off, right? So that's the thing with a limit order. You could be held high and dry waiting at the station for the price to come down to fill you. So limit order when you're going long is always below the current price. Again, if you put a limit order which is above the current price, you're saying, okay, this is the most that I'll pay for this. And the price is already well below that. So the broker is going to say, well, that means that you want to enter immediately. So there you go. And that's in effect a limit or a market order. So that's a limit order. A limit order is generally something to be used either good till cancel. So good till cancel is one way that you'll see it offered in the broker, which means that you can hold it out there for a month or two. You can hold it out there for a month or two before it gets filled. It's rare. You might want to consider cleaning up your good till cancel limit orders after a week or so if you're not filled. You may say, maybe I don't want this anymore. Okay. So good till cancel or daily. Daily means that it's only going to be in effect, in force until the end of the trading day. So at 0000 UTC, it gets wiped off and it gets closed, right? So make sure that you know whether your broker can do good till cancel orders. The third one is what I call, and what I'm typically used to calling, a buy stop. Now, you're going to find other brokers will call it different things. Now, a buy stop is used if you're going to just say, look, if Genesis Vision starts breaking above 15 again, then get me in. Take me into the trade. Take me in. You know, you can think of this as if you've seen in movies, right? You see a train going and then you see somebody running up alongside the train. They grab a handle and they haul themselves up. This is the analogy I want you to think of, where the train has left the station and what you're doing is you're just hitching a ride. So the price is breaking above a certain specified level that you've identified to say, if it breaks above here, then take me in. I want to be part of this trend. Even if it's a fake out, you don't know that yet. You're just, take me in. Now you can enter it up here. You can be more conservative. You can enter it up here to say, I really, 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 really want to make sure that it's a strong breakout, not a fake out. So I'm going to put it further up there. Okay. Pros and cons to that is you're less likely to get faked out, but you're assured of losing edge on the entry. Think about that versus somebody that entered in the pattern down here at 13 and you're getting in at 16 or 17. You've lost quite a bit of edge already. Okay. So that's a buy stop. And a buy stop is a market order. A buy stop is a market order. Now, you can also execute these as a limit order, maybe, depending on the broker. You can do advanced orders with this, and it gets confusing. I don't do this, right? If I want to get in, I typically just get in, and I work the limit to the best of my abilities. So if something fires, if I want to get in, I don't, play games with it. I usually just get in, right? Especially if it's something that we're announcing in the room, And, you know, it would look kind of silly for me to say, well, I think we should get in here. And then here it is a day later and I'm still monkeying around with the order. If I want to get in, I get in, especially with the way that I set the risk on the trade. If I set the risk on the trade to a fixed risk position where I don't care if I lose. In fact, I've already written off the loss. So get in. Okay, so let's go over to the broker here. Boy, look at this thing go. Okay, just because it's at exhaustion doesn't mean that it has to stop this very second, but this thing is moving. We have shorts on the run. So if we go over here to Binance, we got Binance here, don't we? Okay. And look at this. I've got 3 open orders for some of the swing trades that we put in over the months, and they're bagging away down there. They're still good till cancel orders, right? This is the risk of entering swing trades in a bear market, is that you get hauled underwater again. So here's Genesis Vision, and I've got the pair set up here, GVT versus BTC. And look, we've got 3 different types that we're just going to focus on the buy side. We're going to focus only on the buy side because I don't want you guys naked shorting the spot currencies. Don't do that. Wait until you get derivatives and futures to do that. Much, much better. Okay, so there's 3 ways we can do this. We can do a limit. Limit order says, here's the price, and it better be below the current price. So I can say here, get me in at 0019. So the price is already up at 0019786. And I can say, I want to wait for a pullback down to here. So let's see if I can expand this out here. There we go. Okay. So if I want to enter down here, and let me point this out. If I enter, if I'm waiting for a pullback, if I'm waiting for just a little bit more edge and I want to work this a little bit more, I can put in a limit order, which is below the current price. Remember, limit order below the current price. Never put a limit order above the current price because that's not good. You're going to get filled immediately and say, what just happened to me? Okay, so that's the limit order. Now here's the market order. Now let's take a look at the width of the spread here. So we have, let's see, we have bids down here and we have offers up here. So right now the bids, if you wanted to sell this immediately, it would be 19544. If you wanted to buy this immediately, 19546. This is pretty tight. This is pretty tight. So even if you are entering a market order, this is not going to kill you. The bid-ask spread police will not knock at your door if you enter this as a market order. Now, keep in mind that look at the depth of market around here. So look at the bids and the offers. So the bids down here, there's 211. Right? So this is going to take a while to fill. There's a bit of a sell wall or a buy wall down here just below the current price at 275, 211. So this will not move below there initially. But if you go to buy something up here at market, it may zoom up here really quickly. If you enter a big order, it may not be able to be filled with 1 and 7, right? It may have to skip up here to get filled for the rest of your position. And that's where you can lose a little bit of edge. That's where you can lose a little bit of edge. So Tig is saying, how do you do a buy stop on Binance? Well, this is where they're calling it sort of a stop limit. So this is the third option. And if we put a question mark in there, stop limit orders in order to buy or sell a coin once the price reaches a specified price. Let's view more on that. How to use a stop limit function. After a given stop price has been reached, once the stop price is reached, the stop limit order becomes a limit order to buy or sell at the limit price or better. Okay, so what this means is this is a buy stop with a limit. Okay, that might not necessarily make sense, but this is actually a better way to do this. Look at this thing take off. Okay, this is cool. It's fun watching this thing. This is a 1 hour chart, and we're getting some nice 1 hour candles. So what this means is that if we put a buy stop up here at 002, or I'm sorry, let's say we call this a Binance stop limit at 002. What that means is that the price will come up to 002, up to here, and then boom. What happens then is the limit order gets set for 002. So I'm not going to get filled at market. At market might be something slightly higher than that. Now here's the risk in using a stop limit with Binance, is if you get a flush that just completely runs past that point, guess what? So let me draw this out here. If you get one of these moves that happens like straight up through a level, and maybe you had your level at 002 right there. So this is 002, 002. It flies up through this level like nobody's business. And then your order, your limit order gets fired and says, okay, look for 002. But all of a sudden the price is up here. It's 0021 or something like that. And it can happen very, very quickly. It can happen extremely quickly, faster than the market can move, faster than the ability for this thing to fire a limit order in that length of time and the milliseconds that it takes to fire through there. So if you've got a whole bunch of overhead supplies sitting up here just above that level that all get stopped out immediately at that level at market, guess what? If everybody's pushing the offer up at that point, you're not going to get filled. So you're going to sit there and go, what the hell just happened? Or you're going to see that the next morning is that the price went up through 002. You didn't get filled. Your hand slipped off the rail as the train left the station. So that is, in my mind, this is the risk with a stop limit order. It's not a market order. So apparently what must have happened there is that people said, hey, this this is dangerous with thin markets. And so they put a little bit more control on there. So if you want to get filled, if you want to make sure that you get filled, hit a market order and it will always fill you right then and there. And if the market's thick enough, right, if it's dense enough, it's not going to move anything around. You will get filled pretty much right at the bid and offer, especially if it's a smaller order. If it's a bigger one, you better be using a limit order. If it's a bigger order, if you're entering some size in the position. And you shouldn't. I want you to use small positions. Break up any one order into smaller ones, right? You don't have to enter everything all at once. Peter, welcome aboard. Okay, so we've gone over actually a lot of material here. We've talked about the different types of entries for a long entry. We've talked about entering in the pattern once you get your signal. Or if your signal is off a stochastic cross or something like that. You know, you don't have to be using the choppiness index for a fractal entry, but I like using price action. Price action to me is the most elemental way to determine an entry, but it just takes a little bit of analysis to understand what the trend really is. So we talked about entries, whether you're going to enter in the pattern or on a breakout. Again, we're just talking long here. We're just talking longs. Okay. And then from there, mechanically, how are you going to enter on your broker platform? You're just going to punch the button, hit a market order. You're going to wait for a pullback. You're going to let the trade come to you with a limit order, get a little bit more edge into the position, or are you going to use a stop limit so you can sleep at night and let yourself get filled on a stop limit? So 3 different ways to do things, a couple of different ways. And eventually what I want you guys to do is to find your own way. You will find one method that works best for you. Since everything is going to be based on your temperament, your sense of risk and reward, you've got to find your own way to do this. I'm never going to sit here and say that there's only one way to do it. Some people are breakout traders. They like doing the breakout. Hey, I'm going to wait until it breaks out. Other people are a little bit more devious in how they like to enter. They like to wait for a pullback. They love that contrarian entry. I'm going to enter in the pattern, And I'm going to get as much edge as I possibly can on this position no matter what. Different strokes. So everybody needs to kind of find your own way. Experiment with different entries. Experiment with different ways to do this until you find out what your one thing is. Okay, any questions before I skedaddle, as I've got I got people nipping at my heels to get number 10 posted today. Any other questions today? Yeah, Bryce, I got the PDF. I'm gonna upload the PDF here in minutes, and then I'll start working on the video. All right, guys, you guys have a great evening, afternoon, whatever you guys want to call it, and I will see you guys later. Take care, and see you tonight. Bye.
There goes a sight from my soul.